Hello, everyone. Welcome back to the Rational Investors Daily Brief Recap. Fastest 10 minutes on the internet. So let's get to work. First and foremost, we should probably wish all of our American brethren, United States of America, that is, a happy July 4th holiday. And actually, you can really feel it. It's palatable. How the markets have basically just come to a grinding halt here with the Americans away. So we had an interesting report today because we didn't really talk too much about stock. And of course, yesterday we were knocking the cover off the ball with massive stock moves in pharma names and stuff like that, and overstock and Chinese electric vehicle proxy. So we had lots of fun there yesterday. But, we probably should just start off today's conversation with just a quick overview of what to expect here going forward out of the stock market. Like anybody really can tell what the hell is going to happen. But we do on the site, and actually, as I said, today, Thursday, is Julian's day to shine on the site. And we have the baby powder report. Direct from Thailand, and I thought he did an excellent job for everybody today. Just illustrating his view of the market, his unique use of RSI, Keltner channels, Tom DeMark's indicators to trade the market the way that he sees it. And remember, everybody, at the end of the day, you have to figure out what works for you. And one reason why I really like having Julian on the daily brief is he has a very unique, very different perspective of the market, the tools that he likes to use. It's just really a question of building your trading plan, vetting your setups that work for you. Try and have 3 unrelated reasons to consider taking trades. And as I said, Julian uses unique tools that he really likes. So by all means, check that out if you are a site member. And that's every Thursday. We have the baby powder report. So usually what we do, considering Fridays is options expiry day, is we like to take a look through the baby powder report at the options open interest. And we noticed, and this is a great site, this Apricot site, but we noticed that you can see that the institutions, first and foremost, S&P500 ETF sitting at 298 and change. And the institutions write primarily most of the put options. And you can see up here at 298, they're just going to knock the cover off the ball. All of these puts you can see, and this is this great site actually tells you where the heaviest put open interest is, like 35,000 contracts. You can just imagine what their profit is on that. Just ridiculous amounts of money. And all of these puts will basically expire worthless if they just take the market out above this 291 area. So sitting at 299, 298.80, actually they have quite a bit of wiggle room. And we were conjecturing in the class, in the video today, the daily brief, maybe they have some incentive to back the market off a little bit. Keep in mind that a lot of retail participants write call options. A covered call strategy is very popular. So a lot of this could be retail. Keep in mind puts, this is almost all institutions. So if they can move the market around to make sure those puts expire worthless, they will. But with regard to the calls, quite often we see quite a bit of retail open interest in here. So we do have to look at the call information with a bit of a jaundiced eye. But nonetheless, we were conjecturing in the call today, and frankly speaking, you look at the chart, it kind of makes sense that we have a really big econ coming out tomorrow morning, which is interesting because it just so happens to coincide with this U.S. holiday. It's going to be light trading desk, but we have the June jobs report coming out of the States tomorrow. And our sort of conjecture in the daily brief today was, they have a vested interest to actually try and get the market below this green line. That's where all those calls are. There's where that heavy put open interest is. I find it almost impossible to believe that through the end of tomorrow they'll have the market below here, but you never know. Anything can happen in this crazy world. But I wouldn't be surprised if the jobs report, ironically enough, if it comes out really strong, then they're going to say that the Fed is not going to cut rates. They might even increase rates, and so the stock market pulls back. And ironically enough, maybe if the jobs report comes in really weak, they're going to say that, well, that means the economy's rolled over, that growth prospects are really bad, the Fed's behind the curve, and the stock market pulls back. So, with all of these gaps, I wonder whether quite a bit of this action is a bit suspicious, rallying into a holiday weekend for the Americans. Let's take it out on a up note. Politicians can, have parades and stuff and see look at, I'm such a great president, wrap your arms around it, wrap yourself in the flag, yada, yada, yada. But at some point, I do believe that we have to do a bit of backfilling here. So we'll see how that goes. And as I said, from the put perspective, home run by Wall Street. They knocked the cover off the ball. They are very happy. From the call side, I could actually see them pull this market back to make sure this massive open interest in the calls expires worthless. But we'll see how it goes. As I said, a lot of retail could be wrapped up in here. So let's sort of watch how that jobs report develops. And I noticed a lot of markets, gold, yen, Bitcoin, even to a certain degree, everybody's just on pause, with the U.S. holiday. And so we're just wondering whether maybe we have to get that employment report, which comes out very early, 5:30 a.m. my time tomorrow morning. Yuck. But let's see how that jobs report acts. And of course, when you wake up and you see the futures before the stock market opens, you'll have a pretty good idea of how that jobs report came out. So there's sort of your update on the stock market heading into options expiry tomorrow. With the market as quiet as it is, we are noticing that, and actually I do have it just even on this chart here. I've put on the institutional moving average bias, and you can see this is Bitcoin down in the lower left here. They're bullish. Here is Ethereum. You can see the nice turn in here. They're bullish. And through the daily brief today, somebody asked Julian to take a good look at Decred, and even it is bullish. But I thought this was an interesting anecdote in that, Ethereum, higher highs and higher lows defines a bull market, and even something like Decred priced in US dollars, higher highs and higher lows defines a bull market, but everybody's like, oh, it's a crappy alt season. If you measure these things versus Bitcoin, they look like they're on their knees. And this is this whole conversation about this, let's see if I can just hide that, about this dominance, right? And we're coming up to a key level here on the dominance, in that we could very potentially M out here, and these alts actually start outperforming relative to Bitcoin, or Bitcoin can blast off through the top, make a new high, show me a new high, and I'll show you a buy, yada, yada, yada. And that would just basically imply that things like Ethereum loses its lows relative to Bitcoin. And you can even see, based on this M that's potentially coming in on the dominance, you can see even little names like Decred are trying desperately to form W's bottoms here. Long and short of it here, guys, let's not put the cart before the horse. We actually have to see these W's come in on these names relative to Bitcoin for us to believe that the dominant story is over. If these W's do come in, and this just happens to be a really good little just snippet of a cross section of the altcoin market, if these W's do come in, it probably means that Bitcoin has to come back down to earth a bit here. We start failing up into the top end of the ranges, and that dominance starts to M out. I think that's a really big if right now. And frankly speaking, you should never really, front run W's, let them come in. And then you can start saying, all right, it looks like we actually have the potential for an altcoin season this year. But, I think the closing message here for a guy like me is the irony of it all is that, in US dollars terms, whether it be Ethereum or whether it be something like Decred, the altcoin market is actually enjoying a rally. There is an uppy to this. If you can try and concentrate on the little higher quality names, no doubt about it, the quote unquote shalt coins or shit coins, whatever the hell you want to call them, and Trex's issues with delisting, that's definitely still overhanging the market. And I think I talked about that with you recently. There's a whole new slew of delistings. And as long as this trend continues, these shalt coins they're not going to do anything, right? They are just going to sit in the pooper. But, like we said just a moment ago, like the higher quality fundamental names are trying desperately to W here. It's interesting to see the Schultz actually are trying to also put in a cute little W here. That would sort of be predicated on Bitcoin either just, calming down and going sideways and a bid coming into the alts, which is a little bit of a guess, I think, at this point. Or, Bitcoin actually confirms this M, we roll over, and the rest of the altcoins actually just continue on their merry way. My hunch is if Bitcoin rolls over and breaks, probably a lot of these other alts and even the medium-term names will break as well. But we might find, and again, this is a big if, depending on whether these Ws actually confirm, we might find that there's like a balancing in this dominance conversation. Okay, so that's our summary here for today on this holiday, July 4th weekend. Actually, it's Thursday, so middle of the week. We will see everybody bright and early for that jobs report tomorrow. I got a funny feeling there's going to be some pretty wild fireworks to look forward to. Keep your eye on this 297 strike on the calls to see whether those calls expire worthless or whether Wall Street's going to have to actually start shelling out some serious money on them. And then lastly, let's keep an eye on the corn here. And this dominance conversation. For whatever it's worth, lower time frames, we are watching potential algo signals through the evening. So we might get a nice little pop-up here later on through the day here on the corn. But as it stands right now, I'm not doing anything. And really, like I said earlier, I'm kind of looking at this market with a jaundiced eye right now until we get beyond that jobs report tomorrow. Okay, why don't we leave it at that for today? All the best, everybody. Have yourselves a good one. Follow your trading plan. Obey risk management rules. And, of course, try and trade those setups. All the best, and bye for now.